Hey guys, welcome back to the channel. If you're new here, welcome. My name's Elizabeth Johnston and I'm a mortgage advisor, and I try to make homeownership seem a little bit less stressful and you feel a little bit more empowered in what may be the biggest purchase of your life that you'll do once, maybe twice. Today I'm going to be talking about one, like, it's just got everybody talking. I don't even know how to explain it. Everyone is talking about it. It is the lower mortgage rates and how they're creating more opportunities for future home buyers and homeowners at the same time. So let's get right in. So according to Freddie Mac, as of October 9th, the 30-year fixed rate is at a 6.3%, with the 15-year sitting about 5.5%. And quite honestly, rates have been at this for quite some time. So the way buyers are being able to have the stability has been just amazing, because it's a good thing that a buyer doesn't have to panic about, is this the right home? Oh my gosh, I don't want the rates to go up. So just giving buyers the breathing room to make sure that this is the right house for them. This is exactly what they want. It's just great, because having a buyer that's not panicking is a great day for me, because that sense of calm that they are now feeling, it's been gone for a while. So it's such a relief that it's back. And with that calm, there tends to be good news when it comes to being calm. So a couple things is, buyers now have leverage. Leverage is great, especially if you are buying a home, right? Because there's more inventory in the market. You're not like, well, this house has what I like, but I like what this one has. I wish we could put them together, blah, blah, blah. Now you're able to make sure that you get the house that you actually want and not just buy house to buy house. The bidding wars, I mean, certain areas they're still there, but for the most part, I don't want to say it's rare, but I mean, it's home buying. If someone really likes this house, it's going to happen. But it's not as prevalent as it was back in 2020 to 2022. Plus, sellers are now more open to negotiating. They weren't willing to negotiate a few years ago, right? So getting the price reductions, getting the repairs done, or better yet, seller concessions. Seller concessions are beautiful gifts for first-time home buyers, especially, who are scraping by to get money. So asking for closing costs is just amazing that it's even able to be offered at this point. So this window of opportunity that we have with buyers being able to leverage, it's awesome. I can't speak more highly of it than I am right now, but I do have a question. Are you taking advantage of this leverage that buyers have right now? Drop it in the comments. Let me know why or why not. Now let's talk about you getting prepared. So let's say you are taking full advantage of this. One of the smartest things you can do is make sure that your pre-approval is fully underwritten. And let's just go back 1 second. You have a pre-approval, not a pre-qualification. There is a difference. I'm going to put a video in here that I've done before to go over the difference. But basically, when it comes to having a fully underwritten pre-approval, that is the lender looking over your income, your assets, your pay stubs, your tax returns, your W-2s, your credit score, going over programs with you. What program are you using? Not just a pre-qualification, which is just, oh, this is how much I make. You don't have to check me, believe me. Okay, whatever. That doesn't work. Make sure, especially in any market, not just this one, that you always have a pre-approval, because it's going to give the seller the confidence that you can actually afford this property. It's going to make your realtor happy. Yay! Because they're going to go, okay, yeah, you can definitely afford this. Just make sure that you have it. That's the best thing I can tell you. Please make sure that you have a fully underwritten pre-approval. If it is not, make your lender do it. If your lender doesn't want to do it, oh, you're fine. Go find another one because you really need to have it. Now, let me switch over real quick. Let's talk about my homeowners real quick. If you currently have a mortgage that is above 7%, basically if you bought in the last 2 years, it might be worth looking at a refinance. And because really a small rate can be a noticeable difference in your monthly payment. And that's money in your pocket. Now, what I have a lot of my buyers, what they do when they refinance is they'll keep paying the amount they were paying before. They're comfortable with it. They'll be like, Elizabeth, I'm fine. That's great. Now, what if you had a lower payment? You still paid whatever your previous payment was, but you're putting more towards principal, which is then lowering your principal amount, which is then lowering the time that you have in repaying your loan. Now, let's talk about your equity. If you've built up a solid amount of equity, why don't we get strategic with it? Let's say, for example, you have high interest credit cards. You can't tell me you don't because everyone's got a credit card. And credit cards start at around 22%? I've seen some as high as 34%. That is insane. And then once you're in credit card debt, it is so hard to get out of it. So why not use that equity to pay off your high interest credit card debt? Or if you're wanting to start your real estate empire, why don't you use some of that equity to put towards your investment property that you're going to be using as secondary income? It's not about taking on more debt. That's not what I'm getting at. It's about using what you've earned in equity and using it strategically, whether to pay off debt, start your real estate empire, the list goes on and on. Just options. But let me rephrase. At the end of the day, there is no one size fits all. There's no one size fits all answer here. The right move, if you're looking to buy, if you're looking to refi, really depends on your goals and your situation, not someone else's, your situation. That's why I always tell my buyers, don't pay attention to the headlines because you need to look at your numbers. Your numbers are not everyone else's numbers. If you're curious what the market could do for you, I'm happy to hop on a call with you, go over some things, see if it's even a right fit for you. And if it's not, I can help you build a plan that'll get you to where you want to go. Because again, we are goal-oriented here. Now, if you did find this video helpful, please like, subscribe, comment, and share with everyone that you know, just so they know that it's okay if you don't have a plan yet because we can build one for you. Guys, thank you so much for watching. Again, my name is Elizabeth Johnston and I'm a mortgage advisor, and I would be happy to help you the best way that I can. And I'll see you in the next video.